Good evening, everyone. Welcome to today's live webinar on Regulatory and Compliance Framework Governing CSR Expenditure. We are delighted to have you all with us for today's focus session. At the outset, I would like to inform the participants that our chairman, CA Babu Ibrahim, was about to join, but due to some prior commitments, he is unable to join today. We sincerely value his continued guidance and support for this committee. Ms. Preeti Savla, our vice chairperson, will be joining us shortly. It is my pleasure to extend a warm welcome to our Central Council member, CA Vishnu Agarwal sir, for his esteemed presence for this webinar. I would also like to welcome our esteemed speakers, CA Kusai Govawala sir, and our moderator, CA Hital Devani. We're honored to have all of you with us today and grateful for your valuable time and expertise. We are confident that today's session will be insightful and practically enriching for all the participants. I now request CA Vishnu Agarwal sir to kindly address the participants and formally open the session.
Madam, respected in the absence of the chairman of this corporate law committee, CA Babu Ibrahim ji, and vice chairman Preeti Savla ji, madam, our today's esteemed speaker, Kwasai Govawala ji, and the moderator of this particular session, Hital Devani ji, and the person who is behind this particular committee and working very hard day and night, 24 hours, none other than our Simaji Jangir ji. Friends, I welcome all of you in this webinar series 8 for this particular committee. Friends, this is a very important committee for our chartered accounting because whenever we go for any audit, without company law background, we cannot do any audit. If we know only accounting standards and income tax and GST, but we don't know if the Companies Act 2013, friends, we cannot do any audit. So this is the very important uh, committee and very important session today because in the today's scenario, CSR is a very again very important thing for every corporate to spend the up to that limit. How much the turnover and how much is the expenses and how much is the profit and then how much is the CSR expenses. Friends, today is our Govawala is the esteemed speaker. He will deliberate each and everything about this particular thing. Friends, today, the Preeti Savlaji and Babu Abdalji has given me chance to sharing my views on this particular committee. Friends, I am also vice chairman of the direct tax committee and the CP committee. As a direct tax committee vice chairman, again we are doing very good work under the direct tax committee. First time we have launched the Income Tax Act 2025 in the 500 rupees only, and every publication house is selling the 2000 rupees and 2500 rupees. So I request my each and every chartered accountant is present here to take the maximum benefit of Act 2025, our new Act 2025 of Income Tax Act. Friends, apart from this, we have represented before the CBDT and Finance Ministry so many things. We have given the pre-budget memorandum, and after that, we will we will give the post-budget memorandum also. Friends, I request each one of you, if you give any suggestion to the CBDT, kindly send the DTC at the rate of ICI.in. Friends, our chairman this committee, Babu Ibrahim ji and Preeti Savla madam, is doing very good work in its absence here. They are not available today here, but day and night, both my central council colleagues is doing good work for a chartered accountant fraternity. Madam is again very hardworking, and day and night she is supporting my each and every chartered accountant and the student also. Babu sir is from Kochi. Again, he is very hardworking, and whenever we go to present before a ministry, friends, Babu sir is always front for, and he always helping hand to the MCA also. So I request each one of you in his absence here because both of our chairman and vice chairman is not here. But I request each one of you, please join hand for the chairman and vice chairman and my learned speaker Kusal Govawalaji because Kosai Govawalaji because he has again given his valuable time for my each and every chartered accountant. Thank you, sir, for giving your valuable time, sir. And Hital Devani ji, our moderator, she is also giving too much time for the profession. And once again, I thanks to our Secretary Seema Sangirji for organizing this beautiful webinar for my each and every participant. Thank you, friends. Friends, I one my more request to you. on the 30th January, 31st January, and the 1st February, we are doing the WOFA 2.0. Second time we are organizing in which 25,000 chartered accountants is attending across the world, not only for India. So it is very good time to attend the WOFA 2020 to Gofa to at Noida. It is on the 30th, 31st January and the 1st of the Feb. So my request to each one of you, kindly come and attend this very gracious event of Gofa so, at Noida. Friends, this is the only opportunity where we will meet 25,000 chartered accountants, not from only India, but across the globe, across the world. So many of our IFEC president and so many people are coming to address the gathering. So each my request to each one of you, kindly join Gopa. With these words, I thanks to Babu Ibrahim ji, Priti Savla ji for giving me this opportunity for sharing my views. Thank you, friends. Now I request Madam Seema Jangir ji to take the front. Thank you.
Thank you so much, sir, for your encouraging words and taking time out to address this webinar. Your thought-provoking words are really thankful for that, sir. Many thanks for that. I would now request CA Hetal Devani to take over the session and we can start.
Good evening, everyone. A very warm welcome to all for the joining us in today's insightful sessions organized by the Corporate Law and Corporate Governance Committee of the ICI. Today's webinar, part of our ongoing webinar series 8, focus on a topic of significant importance in the current corporate landscapes, regulatory and compliance framework governing CSR expenditure. This session will be led by CA Koshai Goawala. Corporate social responsibility CSR plays a vital role in promoting the sustainable and inclusive growth. Effective CSR implementations require a sound understanding of the regulatory and compliance framework governing the CSR expenditure. This webinar will focus on the key legal provisions, compliance requirement, procedural aspects, and the reporting obligations under the CSR regime. Participants will gain the insights into the eligibility of the CSR activities, computations, and utilizations of the CSR fund, due diligence, disclosures, and the best practices to ensure the transparent and compliant CSR spending. Moving forward, it's now time for the technical sessions. Before moving forward, I would like to introduce, and it will be a great pleasure for me to introduce our eminent speaker for the day, CA Koshai Goawala. Sir is a chartered accountant with over 37 years of rich professional experience and has actively contributed to the professionals through his associations with the INDES Implementations Committee and the Research Committee of the WIRC of the ICI. He is a renowned speaker and has delivered the lecture on diverse subjects, including the tax audits, INDES, IFRS, auditing standards, and ICDS. His expertise also span the company laws, GST, FEMA, and non-residence taxations. Sir has also contributed to the several ICI publications and the professional manuals, and we are honored to have the sir with us today and look forward to an insightful webinar. So without any further delay, let's welcome the sir to take us through the today's sessions. Over to you, sir.
Thank you, Hetalji. Uh, uh, Chairman of this committee, Corporate Laws and Corporate Governance Committee. I must first thank them for giving me this opportunity and inviting me for this lecture. Baba Abraham, sir, the chairman of this committee, Priti Savla, madam, the vice chairman, and Vishnuji, the central council member, who has been spoken some nice words about our organization and this particular thing. Seema madam, who has been relentlessly working behind the scenes to make this thing happen, and it's been very wonderful organization. So, and my professional colleagues, a very good evening to all of you. Let me share my PPT first. Before we go into this topic, let me explain you the principles on which we will be discussing today. I believe in going on a concept basis, not just to bombard you with a technical knowledge, but as to why a particular provision or why a particular aspect has been considered by the government is what we are going to discuss today, and in the conceptual form. So that is what we were going to discuss. So you will hear a lot of times, many times the question why a particular provision has been introduced, and we will try to discuss that as to understand the nuances of that particular provisions. And this particular CSR is a very interesting provision. It also has got a connection with an FCRA, Foreign Contribution Regulation Act, where there is a contribution coming from outside India, and how are we going to deal with it in India. So we will be dealing with something like CSR in India as well as from outside India. So both the channels we will be discussing today in our couple of hours of this session. And of course, after that, if there are any questions, I will be willing to answer those questions. Glad to answer those questions. Yeah. Today's agenda is basically nuances on the taxation of CSR spend, allowability of expenditure on CSR, deduction under ATG, GST implications. And before we go into this aspect, let me just share with you the basics concept of CSR. The concept of CSR is that corporate social responsibility. It is in world over, this concept is there and everybody is following. It's only very few countries have made it mandatory. In India is one of them. They have made it mandatory for all corporates to spend certain percentage of their profits. It's about 2% of the average profits of last 3 years, and on the corporate social spending. Now, this spending is basically to see that whatever the corporates are taking it from the society are giving it back, not the full thing, at least partly something to contribute to the society's well-being. Like, for example, earlier also, even when before this became mandatory, there were many good corporate houses who, as a part of their good corporate governance, they used to do a lot of social activity. We have known I will not name those houses, big houses. They had housing societies for their employees. They used to do education. There are certain corporates who used to do cleaning of the streets, roads, etc., and they used to do it even without being a compulsion. So it is not that somebody should force upon you to do something, then only you have to do it. But it is our duty as a citizen of this country that we must do something for the society which is giving us so much. We are earning so much from this society or from this country that it is our duty that we give it back. And when we give it back, it is in the form of a voluntary. It's a contribution to the society. Of course, now under the Companies Act, it is in Section 135. It has been made mandatory for each company who is meeting certain criteria. I will come to those criteria. Then they are required to spend certain percentage of their profits before tax, the profit before tax, and then they have to contribute to the society well-being. That the criteria is very simple: the net worth of 500 crore or more, then the turnover of 1,000 crore or more, and the net profit before tax of 5 crore or more. If this criteria, any one criteria is met, they are required to do this corporate social responsibility and spending, and that is 2% of their average last 3 years profits which they have to spend. Now, it could be on an ongoing project, or it could be a one-time project, or some expenditure on a recurring nature. May not be in a project, but it can be some cleaning of something. If there is a project for education, creating a schools or hospitals, also that is also a part of the activities that is permissible under CSR. There is a list of activities which are permissible under CSR activity, and that only can be done for poverty, for elevation of poverty, for education, for social well-being. A lot of things are given in that particular schedule. Now, this important aspect comes into mind is when a company was spending money on this CSR activity, whether it is deductible for them or not, whether deduction is allowed under Income Tax Act or no. So this was the main question which came into mind of various people. So let's discuss that also as to allowability of expenditure on CSR. And then, of course, it is also possible that some companies may not spend themselves. They may give a donation to another agencies or another trust or NGOs who are taking up this activity of doing the CSR work. So it is even allowed to give donations to those NGOs. But then, of course, those NGOs have to be registered with the MCA under the CSR section 135. They have to be registered, and then only they can accept CSR related donations, and they can carry out this CSR activity. And then only this company, when they give donation to a CSR recognized registered NGO, when they give donation, that will be considered as a donation under CSR. Otherwise, it will not be considered as a donation. Under Companies Act, this is a stringent penalties have been prescribed, and for non-compliances. Earlier, it was like people were not being penalized for that, and it was just that some reporting was there, and they used to get some letter, okay, why you have not done it. But now it has become mandatory, and the penalties have been levied. There is also a reporting under CARO also by the auditor, that whether that 135 has been complied with, and whether the amount which is required to be spent has been spent or not spent. So these are the requirements of the, even apart from that, Schedule 3 requires you to disclose in your notes to accounts the amount of expenditure incurred on the CSR, and whether it has been actually spent, and how it has been spent. All these things have to be disclosed in the notes to accounts. So now the disclosures have become very much important and mandatory. And because of that, the company, when they make this expenditure, they are supposed to disclose this in the relevant paragraphs of the financial statements. And allowability of, now looking at various sections of allowability of this expenditure under Income Tax Act. And also we will look at the GST implications on this. What are the GST implications for this CSR thing activity? Whether you get input credit because you are spending money, you are buying some items for your for this particular CSR activity. Whether any ITC paid on that, whether it is allowable under GST Act or not, that also we will examine. Apart from that, we would also like to take you to the Foreign Contribution Regulation Act, which also, there are some companies outside India doing a lot of CSR in India, whether it is permissible, what are the things to be done, what are the regulations to be complied with, what are the compliances to be done in India before they can do some activity of CSR in India. So that also we will be discussing, because there are many companies who is willing to give a lot of money to the NGOs in India, and whether that NGO can accept this particular donation from outside India is a question mark. And we will discuss in detail as to whether such NGOs can accept such donations and can carry out this CSR activity in India on behalf of those companies outside India. We will take up some case studies and we will discuss. Of course, within the ambit of 2 hours, we will try to cover all these points, and then later on we'll take up some question and answers. First, let us get into the first basics of the CSR. As I already told you that only few countries, including India, have legally mandated CSR. The rest of the countries have voluntary, but there are people, there are companies outside India, wherever, even if it is voluntary, they are doing it without even required to be done on a mandatory basis. Even before CSR, many corporates, as I told you, many corporate houses did CSR activity in India, and they contributed to this social objective. It entails responsibility for society, where the enterprise is using the resources of the society. So it is like a payback to the society for something what you are getting from the society. And it is, of course, the CSR activity cannot be used for marketing. That means the company which is carrying out CSR activity cannot use the brand name, or cannot try to publicize its company's name, so that it can show that yes, this company is doing this CSR activity as a matter of branding or matter of marketing. No, you can't do this. If you've done it as a marketing, then it does not fall under the CSR activity. It goes under a business expenditure, and it's like a marketing expenditure, and it's not a CSR activity. And so you cannot claim that set off against your CSR obligation. So you cannot utilize that. So marketing is out of the CSR component. You have to do it without any marketing, which is basically a social activity. It is not a business activity. You have to be very careful on that. There are various things like taking care of environment, cleanliness. These are the areas of CSR activity. Infrastructure development for a society, like schools. You can develop hospitals, schools, education centers. All these things are part of your infrastructure development facilities for the society, are the key activities under the CSR. Many corporate houses provide city cleaning services that I know. In Pune also, there are many corporate houses who are doing morning. You can see those trucks moving around and the roads are being cleaned free of cost. The PMC is not doing it. It's the companies which are doing it as a part of the CSR activity. So they are buying those trucks, they are engaging people, and they are spending on the petrol and the diesel to do this cleaning work all across the city. So this is something a government service they are doing. Now let's look at the allowability of deduction under Income Tax Act 1961. The question comes to the mind of a company that when I'm making this payment or I'm incurring this expenditure, whether this expenditure is allowable under Income Tax Act. Earlier, there was an amendment to the Section 37, and prior to this amendment to Section 37, it came in from effective from 1st of April 2015 onwards. This amendment was specifically brought in into Section 37 because there was a controversy. But then you can also see that the even CSR was mandated from 14-15, this is the financial year, and this amendment was made from effective from assessment year 15-16, which is a financial year 14-15. So from the first year onward, when the CSR was mandated, then this particular provision has been introduced. Section 37 has been introduced, and explanation 2 in the 37 says that for the removal of doubt, it is hereby declared that for the purpose of subsection 1, that is to give the deduction under Section 37. 37 is the general deductions under Income Tax Act. Any expenditure incurred by an assessee on the activities relating to the corporate social responsibility referred to in Section 135 of the Companies Act shall not be deemed to be an expenditure incurred by an assessee for the purpose of business or profession. So they have, by deeming provision, they said, no, this will not be for business and profession. And that is what I told you, that they can't use it for marketing or to enhance their image or something like that. It has to be totally, discreet. It cannot be that they are doing it for their own business promotions. And now Section 37 explicitly allows expenditure only if it is not a capital expenditure, it is not a personal expenditure, and wholly and exclusively for the purpose of business or profession. And here it says it is deemed not for the provision of business or profession. And then hence it comes out of the Section 37. And there is no other section under the Income Tax Act which allows this deduction. The residue Section 37 was the only section which there could have been a deduction. But then with this amendment to explanation 2, and with this clarification saying that it is not a business expenditure, it is not a expenditure for business or profession, it is outside the scope of the deduction, and no CSR expenditure can be allowed as a deduction under Income Tax Act. So this is the explanation is very clear about the disallowability of expenditure on GSR. Now, there is another section of 80G where, as I said, if the CSR activity can be done not only directly by the company through expenditure, also it can be routed through a donation to an NGO. It is possible. Now, how do you handle that? Now, if it is a donation given to an NGO, it's a charitable trust, which is registered under the MCA as a CSR, then only it will be eligible as a CSR expenditure. Otherwise, it is a pure donation. Then there is no CSR compliance. You have to have extra expenditure to comply with CSR. This donation will not be counted. So you have to first find out whether this particular NGO is registered under the MCA. Now the process is very simple. You have the NGO will have to apply to the MCA online, and they have to fill up the certain forms online, give the details of their NGO, and generally registration is granted within a period of about, at least our experience has been in the region of around 3 to 4 days. We get the registration done, unless the traffic is too high, and sometimes it might take little more time. But otherwise, 3 to 4 days you get the registration, and then you can start collecting donations for CSR activity. But provided the NGO is carrying out, or the objects of this NGO is only as mentioned in the CSR activity. If the objects are different than the CSR activity, then they will never get registration. So only when they'll get the registration is when their objects are matching with the CSR activity, like education, healthcare, or something like that, or elevation of poverty, whatever is mentioned in the CSR, then only those things can be available for the donations. And of course, generally the charitable trust will have all these kind of objects in their object clause only. There will not be anything other than this, because the CSR list is a pretty exhaustive, and that exhaustive list is mainly for all charitable objects, all the objects to society, social norm. It is not for any personal gains. Charitable trust should also be registered under ATG. Then only they can collect ATG donations. Otherwise, the company will not get any benefit of ATG. It will be only a pure donation of CSR compliant. That's it. No ATG deduction. Now, question is whether ATG deduction is allowable under this when you do a donation like this. Now, if you look at the law, the way the law has been drafted, ATG has got several small subsections, which is covering various different types of donations, like Prime Minister's Relief Fund or other funds. Then there are Swachh Bharat Kosh, Clean Ganga Fund. Then there is a general donation, which is given to a charitable trust, an NGO. Now, if you look at the way the section 80G has been drafted, it says that no deductions will be allowed under this particular section under for the CSR given for the CSR donation to in case of section 80G23HK, that is Swachh Bharat Kosh and Clean Ganga Fund. If any donation has been given for these two purposes, then no deduction will be allowed to the donor, because even though it is ATG is available and everything is available, it cannot claim ATG because it is a CSR donation. Yes, if you give a specific ATG donation only without linking to CSR, then you can claim ATG. But if it is only relating to CSR, then no deductions of this particular section will be allowed. You cannot, it's not permitted. So this 135, section 135 of the Companies Act, if it is to be compliant with, you cannot give donation under Swachh Bharat Kosh or Clean Ganga Fund. No deduction will be allowed. You can give donation, but no deduction will be allowed under ATG. Now, but if you see this, there is another section 80G24, which is referring to the charitable trust, which is not being prohibited. So there is no specific, no under Income Tax Act, there is no prohibition for, getting a deduction under this particular subsection of the ATG. So it can be implied that a charitable trust receiving donations under CSR, under ATG, can claim ATG deduction and claim benefit of ATG. Now, let me take you to the what is the support. I mean, you will ask me what is the support. I have got two supports. One support is the FAQ of the MCA, and there is also certain judgments of certain tribunal. And of course, there is one judgment which is against, but then there are other judgments which are in favor. I will share all those judgments also with you. First, let's understand the FAQ of the Ministry of Corporate Affairs, which what it says. Basically, question number 6 of that, it says what tax benefits can be availed under CSR. So it says that no specific tax exemptions have been granted to CSR expenditure. Finance Act 2014 also has clarified that I told you, expenditure on section 37 not allowed. So that is what it says, the question. And it also says spending on several activities like Prime Minister's Relief Fund, scientific research, rural development projects, skill development. These are all the CSR activities which found place in Schedule 7 already enjoys exemption under different sections of the Income Tax Act 1961. That means by indirectly this particular FAQ says that you will not get section 37 deduction, but if you are giving some donations in this particular manner, probably yes, you can get set off, you can get deductions under the relevant sections of the Income Tax Act, and that is ATG 2726. So that is what we can look at. That is charitable trust is allowed. So here a clarification issued by one arm of the government supports the view that the deductions under the ATG is allowed, donation is allowed. Now look at those judgments which I told you, that judgments which are, there is one contrary judgment, and there is a favorable judgment also. Now here in case of a Goldman Sachs Services Private Limited versus Joint CIT, assessing officer, without verification of the donation, disallowed the deductions under section 80G on the basis that donations were in a nature of CSR expenditure and not in a nature of voluntary contribution. Now, what was the principle that was laid down in this particular judgment is that if voluntary, when ATG is talking about, it is talking about voluntary contributions. It is not talking about mandatory donations. Now, your CSR is a mandatory spend. You have to spend. There is no choice. So it is a mandatory expenditure and it is not a voluntary contribution. And hence, there is a difference between these two donations. One is the mandatory one and one is voluntary. So it cannot qualify as a voluntary contribution. And once it cannot qualify as a voluntary contribution, ATJ does not apply. That is because ATG is talking about voluntary contribution and not a mandatory donation. So this is the basis on which this particular judgment was made. There is a contrary judgment in the case of a Bangalore tribunal observed that CHR expenditure was required to be incurred as per CA 2013. And as per the amendment introduced to section 37 of the Act, deduction for the same was not available. Now, a similar section is not there or explanation is not there under ATG, except in case of a Swachh Bharat Kosh and Clean Ganga Fund. So if they wanted, if the legislature wanted that entire ATG should not be available, then there should have been a rider on the front and with the full section of ATG saying that this section does not apply to any CSR spend. But they have not done that. They have only made only two subsections, two small subsections being disqualifying for ATG to a CSR spend, and they have not made the entire section disqualified for the entire for this deduction. So that by default it means that the other donations to other provisions which is there under ATG should be allowable to the CSR spend. So this is the interpretation. It's a matter of interpretation. There will be definitely a litigation. Once you claim ATG, you have to be prepared for litigation. So this is my personal view, and we of course can fight it out. This is what I feel, because there are judgments, there are this MCA this thing also is there, the FAQ is there. Plus, we can also argue that if they wanted, they could have done the full ATG as non-compliant. Otherwise, what was the need of bringing those two sections only as an amendment? And if the theory was voluntary contribution versus mandatory contribution, that would apply even to the Swachh Bharat Kosh and Clean Ganga Fund. So there was no need for a specific provision here. There was no need for a specific mention of this particular thing in this thing. So that by default, it means that yes, ATG should be allowed under this. Of course, as I told you, matter is to be litigated, and this matter is still pending before the Supreme Court. The judgment of Golden Shares is pending before Supreme Court. So we have to wait and watch what happens. Now look at what happens to whenever any expenditure is incurred on the GST. There is an input credit always there. There is always a GST component in many of the cases. Like some expenditure incurred will have a GST invoice. Now, whether that input is available to the assessee or no is the question. In my opinion, it is not available. The reason is, of course, now we have to bisect this into two periods. One period is where a law was amended on 31st of July 23. So anything post 31st July 23 and pre 31st July 23. So there are two different periods which we have to look into it. Post 31st July 23, it is a very specific provision under the GST Act that no GST input credit is under a block credit. And under 17.5, you are aware, 17.5 is a block credit. So 17.5 FA. 17.5 FA is one which has been introduced specifically on the subject. The goods or services or both received by taxable person which are used or intended to be used for activities relating to his obligations under a corporate social responsibility referred to in section 135 of the Companies Act is not allowable. It's under a block credit. So it is very clear that ITC on this particular item, very clearly they have defined what is the expenditure incurred on what. It is on the one on the corporate social responsibility, which is referred in 135. That is the CSR we are discussing now, which is the mandatory CSR, and that on that input credit will not be available. Now, what happens prior to 31st July? Let's look at situation pre-notification. 31st July is the 23 is the date when from which this notification has been issued. So from that date, it is very clear. But what happens prior to that? Now, there was no such block credit prior to this. In the GST started in 2017. So what happens from 17 to 23 up to 30th June 23? Now here, it is again a debatable issue. Now, how it is debatable? First of all, the ITC is allowable only for furtherance of business. That is very important because entire GST is based on the concept of furtherance of business. Whereas you saw that definition saying that no, this is not a business, it is not considered as a business, it is not considered as a normal business provisions of CSR is not in the normal course of business. So 135 states, again 135 also states that excluding activities undertaken in pursuance of its normal course of business. That means if you do anything in course of your business, that is not CSR. So what is done other than normal course of business is only CSR. That means if you are into a business of something and if you are business of cleaning and you are doing cleaning work, then it is not CSR. If you are into a business of something and then you do some other work which is social activity, then it is considered as a CSR and not as a part of your business activity. So it should not be a part of your normal course of the business. The difference now, there is a difference between the furtherance of business versus normal course of business. This is what the twist is. This is where the twist is. And prior to 23, the 1st of July 23, this aspect can be considered whether ITC will be available or not available. It is a debatable issue, a highly litigable issue. Of course, the GST department is not going to accept the contention. You might have to go into a higher litigation and fight it out before the High Court or maybe Supreme Court. Because here you will have to argue that it is not a question of normal course of business, but ITC talks about furtherance of business. So this is not furtherance of the business. So now this is the AR of Dwarikesh Sugar Industries, which held that CHR is not a charity. Sonia Bhatia versus State of UP, and these are all pre-notification judgments, and there they said allowable. It is allowable. ITC is allowable. These are the two major judgments which allows. But then when it is an advanced ruling, it actually applies only to the person who has applied for it. It doesn't automatically go to the any other person. But in spite of that, you can take support and at least fight it out. It's a litigable issue. And there is also a Supreme Court judgment in case of Sona Bhatia versus state that it is not a charity. So when it's not a charity, it comes to a business or a furtherance of a business. And when it's a furtherance of a business, then ITC should be allowed. So CSR is not a voluntary, but it is obligation, and hence you can't say it is charity. Non-compliance can cause disruption to business. That's the reason furtherance of the business. Right? I'm doing it just because if I don't do this, then my business will get disrupted. There will be penalties. There will be consequences of non-compliance with CSR. So I have to do it. There is no choice. And so it is like you are getting your audit done. It is no choice. You have a compliance issue. You have to comply with it. Otherwise, you will have a penalties, and you cannot carry on business without doing the audit. So it is the expenditure on audit is allowable as a deduction. Even ITC is allowable as a deduction. It is not for business. It is for doing compliances of law. Now, very quickly, we will go into what happens when a foreign company contributes to an Indian entity or an NGO. Now, let's understand there is a law called Foreign Contribution Regulation Act, FCRA, and it is a very draconian act. The reason, of course, I will tell you the reason why this is draconian. There is a reason for this. Conceptually, I will explain you why this particular law is draconian, because there are huge amount of penalties and prosecution for any non-compliance of this FCRA law. So one has to be very careful when implementing FCRA. If an NGO in India is receiving any donations, one has to be very, very careful whether they are complying with FCRA or no. And if they are not complying with FCRA, please do not receive any donation or any contribution. Otherwise, you will be in big trouble, because there is a prosecution, and this particular law is being administered or managed by Home Ministry and not by the Finance Ministry, because it has nothing to do with foreign exchange. It has nothing to do with it. It is managing the integrity of the country, internal security of the country. So when it is coming to the national security issue, then there is no compromise. And we also, as a citizens of this country, would not like to compromise the national security of our country. So in that situation, FCRA law is very, very strict. And the person who is policing this particular FCRA is nothing but CBI, Central Bureau of Investigation. So you can imagine the kind of seriousness with which this act has been drafted. Basically, the law has been made very strict only on the grounds that they don't want any money coming in from outside India or any gifts coming in from outside India, which will have a terror funding component. By there will be something like an element of terror funding or any drug funding or anything like that, illegal activities carried out in India to support that, even for the political instability. Sometimes the foreign entities, they try to give money to some political parties or press or media and other people to influence their views and get those that country to do some get this favorable status for India. So there are a lot of reasons why this contribution is given. It is not for the free of cost or charity, but there is some quid pro quo, and that quid pro quo is what the government is worried about, and that's the reason there are a lot of restrictions and conditions on this FCRA. So we must understand the law before we implement any such donations coming from outside India into India for any CSR work. Now, object and a purpose, of course, I have already explained to you, to regulate and acceptance and utilization of FC foreign hospitality by certain individuals or associations or companies. Now, here we have to ensure that any of this person who is supposed to give the donation is defined, who is supposed to receive is defined, and what is supposed to receive and define is defined. Like, for example, there are certain people who cannot receive, irrespective of registration or irrespective of any approval. They will not get approval and they will not be eligible for any donation, irrespective of their amount or quantum or whatever. So there are classes of people who will not be eligible. There are classes of people who can get it provided they comply with the law. So we will explain you the law what is applicable. Now, there is a blanket prohibition, as I told you, on certain persons from accepting FC. Then there are some restrictions on certain persons from accepting foreign hospitality. Now, hospitality, when I mean, is that suppose if there is a foreign delegation going out, in government delegation going to a foreign country, they are being treated very well over there and they are being given some gifts over there. So whether they can accept those gifts, that is also a question. We will discuss that also as to what are the rules and regulations for that. Regulating the acceptance of foreign currency by persons having a definite cultural. Now, this is where the NGO comes in. Any NGO in India who has got a cultural, economic, educational, religious, or social program can receive this foreign contribution for carrying out any CSR work in India, provided, of course, they are meeting with the conditions of this FCRA law. And we will try to understand what are the compliances that is required to comply with this FCRA law. Now, what is first of all mean by a foreign contribution? We have to define three things. One is what is foreign contribution. Within foreign contribution, what is the foreign source? And foreign source and who can receive? Who is the final person who can receive in India? So there are three parties involved, three things involved which we will have to understand and define. First, let's understand what is the meaning of foreign contribution. Means any donation, delivery, or transfer made by a foreign source, okay, of any article, currency, or any security. Now, see, it is even in kind. If donation is received in kind, suppose if there is a foreign company who is sending some blankets to India to serve some poor people in India, that also is not allowed unless it is NGO complies with FCRA law. So you can imagine that even they want to do some good activity, CSR activity in India, but they cannot do it provided unless and until that NGO which is receiving this blankets, they cannot directly come and do the distribution of blankets in India. They have to go through some NGO in India, and the NGO should be eligible to receive this donation, and then we will see what is the eligibility of that particular NGO. Covers contribution in cash or in kind, as I told you. It is both ways. Covers Indian or foreign currency. So Indian currency also is considered as a foreign currency when it is coming from outside India. So it is not necessary that suppose somebody issues a draft in Indian currency, Indian rupees, and that is coming from outside India, it is considered as a foreign currency. It is not considered as a Indian currency. The reason is very simple. Question is why? Why an Indian currency is considered as a foreign currency? Because when, suppose, for example, if they send the US dollars from outside India, the Indian bank is going to convert US dollars into Indian rupees. And suppose if you get an Indian rupee draft from outside India, the foreign bank has converted that US dollars into Indian rupees. So somewhere conversion has happened, and that is a foreign currency is transacted. So it is Indian currency also is considered as a foreign currency as and when the money is received in India. Wide definition even covers advance or loan received from a foreign source and indirect receipts from foreign source. Now, this is very, very dangerous. Suppose if an NGO receives a loan from a foreign entity and it is considered, will be considered as a contribution, and there are cases we are aware about where notices have been received on receipt of this loan. When it is a returnable loan, I have to pay back. But no, that is of course a FEMA which deals with this borrowings and in Indian rupees and all that. But when it's coming to NGO, then even these loans can be considered as a contribution in garb of a loan. So as if it is something like a coming to you as a loan, but you don't pay after 10 years, you pay that money has no value. So after 10 years, when you pay or there is no interest, then it is actually nothing but a contribution. Now, what is a foreign source? We mentioned to you that a contribution cannot come from a foreign source to an NGO unless NGO is complied with FCRA. Now, what compliance with FCRA? We will look into it later. But first, understand what is the foreign source. Foreign source, these are the list of entities which are talking about foreign source, foreign company. If there is a foreign company which is trying to give a donation to an NGO, no, it is a foreign source. Unless it is complied with, unless NGO complies with FCRA, no, you cannot. Citizen of a foreign country. Now see, here it is very interesting. If you see this entire list, non-resident Indians are not considered as a foreign source. That means if you have an NRI outside India and if he wants to donate something to this charitable trust in India, NGO in India, it can without any compliance of FCRA. It doesn't, FCRA is not applicable in this case because it is not a foreign source at all. Only when the money is coming from a foreign source, then the FCRA comes into picture. Otherwise, FCRA is not applicable. So, an NRI can give any amount, 100 crores, 200 crores to an NGO in India for doing any social activity work or doing any, like education or poverty or whatever, distributing blankets or doing any charity, it can do it without any approval or anybody asking them to do it. Now, there is any international agency of foreign government is not allowed. If there is a department of a government, no, that will not be allowed. Corporation not being a foreign company incorporated in a foreign country or a territory. It could be a corporation, it may not be a company as per the laws of that country. If there are, you sometimes see a many incorporated company which are not a company as per their laws, but that also are covered as a foreign source. A multinational corporation has got too many separate branches or branches in various countries and operations from various countries like Singapore or UAE or wherever. They have got so many operations, so it is called multinational company. Trade union in any foreign country or a territory. So trade unions are also not allowed to give money, even though they may not be incorporated. They might be just this. Foreign trust or a foreign foundation cannot give is a foreign source. So unless it is complied with FCRA, they cannot give to NGO. Society, club, association of individuals from outside India cannot give. Now, here very interesting. As I said, NRIs can give. Now, what happens to OCI? OCIs are who are the people who Indians who go out of India. They stay in India. They go to US and they take citizenship of US and they surrender Indian citizenship. Under FEMA, a PIO or OCI and an NRI are more or less at par. They enjoy the same benefit as an NRI will enjoy. They can buy properties, they can buy shares in the Indian company, do whatever which an NRI can do, a PIO can do, or a OCI can do. Whereas under FCRA, as I told you, it has nothing to do with FEMA. FCRA, OCIs do not have a special status at all, and they are considered as a foreign source. So even if there is an Indian citizen who goes to US and takes up a US citizenship and surrenders Indian citizenship, now he cannot remit money to an NGO in India without complying with the FCRA law. Now, foreign company, as I already told you, this is basically a company incorporated outside India. a foreign company within the meaning. Now here there is a little bit of a lacuna here. There is a debatable lacuna. A foreign company, a company which is a subsidiary of a foreign company. That means an Indian company which is a subsidiary of a foreign company is also considered as a foreign source under this foreign company definition, section 21G of the FCRA rule Act. Now, under this, what happens is, suppose if there is an Indian company has got 100% shareholding of a foreign company, or is a subsidiary, 51% or 50% or more than 50% is held by a foreign entity. It is many companies in India have shareholding from outside India, and this Indian company cannot give loan to any, cannot give any CSR to an Indian company. It becomes a foreign source. Now, this was the position earlier. Now there has been some amendment. I will share with you what happened. Okay. So this amendment has slightly modified the entire version. Now this amendment does not come under this section. It has come in a different section, but it contradicts this particular thing. And there is a since it is a specific provision of the Act, then general provisions do not apply. It is a very basic principle of law. So when there is a specific provision made where it allows certain Indian company who is a subsidiary of a foreign company to do a CSR in India, then the general provision which is like this foreign company subsidiary, because foreign company defines subsidiary, but there is no prohibition as such. The prohibition is by way of the foreign company is a foreign source. That is the only, and that foreign company includes an Indian company which is a subsidiary of a foreign company. So naturally, they become foreign source as per this section. But then there is another section which specifically provides for an exemption, and both are on the same platform. So we have to say that there is a specific provision allowing something, general provision not allowing something should be overruled. Now, basis for establishing a foreign source. A non-resident Indian in foreign country having nationality as an Indian is not a foreign source. So that answer is no. The question is whether it is a foreign source or not. Non-resident Indian in a foreign country having nationality of other country, like I told you, OCI, yes, it is a foreign source. Foreigner in Indian currency. Even foreigner giving the money in Indian currency, it is a foreign source. It is yes, because Indian currency will be considered as a foreign currency. Indian in a foreign currency, yes, no, it is not a foreign source because Indian is there, no. So whatever contribution he gives, in whatever manner it gives, no issues on that. He doesn't have to comply with FCRA provisions. Private limited company registered in India having foreign shareholders. Now here, this is what I was telling you. It is considered as a subsidiary of a foreign company. Then there was a problem in the definition of foreign company. Now here it could have a shareholding. It could be when it is a shareholding, it is not a subsidiary of a foreign company. It is individual shareholders are there. So then there is no question of any disallowance, any question of any compliances. But in case of foreign company having a subsidiary in India, then that foreign company definition was not permitting. But then there is a separate amendment. I'm coming to that. Now this is the amendment. This is a chart which I have made. Company as a foreign source. Now, if it is a foreign company, if you see the foreign company definition has got a subsidiary of a foreign company. If you see this particular aspect, it is subsidiary of a foreign company, which is a subset of this foreign company definition. So under this definition, it becomes a foreign source. But now then there is another definition, section 2J4, which says company registered under the Indian Companies Act, where it was initially provided more than one half of the nominal value of the share capital India held singly or in aggregate by one or more of the foreign company was earlier considered as a foreign source. In fact, it was a separate line item, separate item. But then an amendment came on 26th of September 2010, the Finance Act 2016, which has now exempted this particular provision. And it says, what it says is that in case if this particular investment which is done by the foreign company in this Indian company is as per the FEMA rules and regulations. FEMA has got specific non-debt rules which says how the foreign investments can be made. For example, I will give you an example. Suppose that there is an Indian company. Indian company can invite 100% shareholding from in some sectors. it can give 100% shareholding. In some sectors, there is 74% shareholding. So suppose the company has put in 84% shareholding instead of 74% and not reported this extra 10% to the RBI, then this particular benefit of or the exemption will not be available to this to this Indian company, and Indian company will not be in a position to spend CSR to a NGO it will be considered as a foreign source, and that NGO cannot collect money from this Indian company unless there is a compliance with FCRA. So now this is very interesting and very important. When an NGO is receiving donation from an Indian company, it doesn't know whether it is compliant with FEMA or not compliant with FEMA. So you should take a declaration. The NGO should take a declaration that they are in compliance with the FEMA provisions, and then there is no requirement for compliance with FCRA unless they themselves are compliant with FCRA. If they are not compliant with FCRA, they should be very careful accepting any donation from an Indian company, because they would not know who are their shareholders, what is the terms, how they have allotted the shares, whether it is in compliance with FEMA or non-compliant with FEMA. How would they know? They have to take a declaration or maybe a CA certificate from their auditors saying that they are in compliance with the FEMA provisions, and then only they should accept the donation from that company. Otherwise, they will be in trouble receiving these donations and be penalized under FCRA. And penalized in FCRA is not just 3 times as in FEMA, it is prosecution straight away. So of course there is a penalty also, but there is a prosecution also as far as the FCRA non-compliance is concerned. So this is the amendment which helped in clarifying certain issues and permitting this Indian subsidiaries to give CSR donations to a NGO. FCRA is, as I told you, is administered by the Home Ministry, and object is to regulate FC fund received and prohibit FC fund which may be detrimental to the national interest. So that's the reason why such a harsh penalty is there. So while passing FCRA, it was clarified that government does not encourage receiving foreign funds. So that's the reason it has been made so stringent that it's very difficult to get today, even to get an approval under the FCRA. There are certain approval procedures and the prior approval as well as the registration under FCRA. That approval, if you apply, in 9 out of 10 cases, it will get rejected. So, I mean, or there will be so many queries, you will never be able to comply with those queries. And hence, what the government is trying to say is that we don't want foreign funds for our operations here. We want it for FEMA purposes. Yes, they want it for the carrying out of the business, but not for the donations or charity. We have got enough resources in India for charity, so they don't want any foreign funds coming in. Source of receipt of foreign contribution, as I said, PI and OCI is considered as a foreign source. Foreign citizen is considered as a foreign source. Foreign institutional donors are considered as a foreign source. Foreign companies, branch office or foreign companies, even if registered in India, is considered as a foreign source. Now, there is a blanket prohibition. I told you, Section 3 of the FCRA says that some people cannot receive foreign contribution. Now, who are these people? There is candidates for election, because anybody who is associated with a political thing will not be in a position to get this donations. Public servant, judges, government servants, they cannot get contribution. Members of any legislature, which also includes panchayat. Even panchayat, panchayat is a very small level in a village. They also, if they are elected as a panchayat member, then they cannot get any foreign contribution from outside India, or they cannot even use the foreign hospitality. Political party and office bearers thereof. So even to the extent of office bearers also cannot get a donations from outside India, including any organization of a political nature as may be specified by the central government. So now here again, if you look at it, the wording of political nature is very, very wide. I will come to it a little later. And of course, there has been a judgment of Supreme Court overruling that particular provision. We will discuss that a little later. Association or company engaged in production of broadcast or audio news. Now, why all this? Why this provision? Because the government doesn't want any interference from outside India in our media or print media or on the electronic media or in our political system, so that if by giving donations to those people, they can influence. Even if you see the FEMA also, certain print media and all that, and this cannot be having foreign investments. So there are certain restrictions. So they don't want, India doesn't want them to control our media house, or because otherwise they'll become their mouthpiece. If suppose tomorrow an Indian foreign company is going to donate some money to this print media, they will talk in their favor and talk something which is not actually unbiased. That is what we want, unbiased reporting. So this will not happen unless and until we prohibit this particular donations coming in from foreign source, because otherwise they will influence their own thought process into Indian streamline. So correspondents, columnists, editor, owner, printer, or publisher of a registered newspaper or a company. Now you can say even a cartoonist, if he is a cartoonist, he cannot receive because he will also get influenced. A columnist, if you are writing columns in the newspaper, you cannot receive foreign contribution. Individuals or associations who have been prohibited from receiving FC, and there is one specific case, I will come to it later, where they have been specifically prohibited. Public servants has been defined as prohibited category to receive foreign contribution. Public servant includes any person who is in service of the pay of the government. Now, in the government service, there are so many people who are not even like on an employment basis. They are also on a contractual basis. They also will be covered here, because that is what also they said, it includes the person who is getting any remuneration from government is considered as a public servant. And you must be aware that even in the housing society, the office bearers of the housing societies are also considered as a public servant. So it is to that extent you can go. Now there are some exceptions to this blanket prohibition. An exception says that foreign contribution can be accepted even by prohibited category in the following situation. If they receive any remuneration for rendering services, then it is not a foreign contribution. If you are, suppose if there is a columnist who is rendering some service to a foreign newspaper, fine, he's receiving some fees, quid pro quo. There is a quid pro quo. He's rendering service, he's receiving the certain money. That is not a contribution. That is not prohibited under this law. Only when he receives something without doing anything, it's prohibited. He's an agent of a foreign source in relation to any transactions made, like he receives a brokerage or a commission, it is allowed because he has done some transactions. He may not have rendered direct service, but he has done an indirect service. Gift or presentation as a member of the Indian delegation, somebody who goes out there and they get some mementos or some gifts when they go out there. But that gifts, of course, subject to the central government rules. It should not be something very expensive, like some diamond or some gold jewelry or something like that. It cannot be that. It can be some item of gift item, which is okay, which is within the parameters, what is in conformity with the central government rules. If that is within the rules, it is allowed. Otherwise, they say, no, we cannot accept it. Sorry. Thank you very much. Receipts from a relative. Now, suppose if they have a relative, up to 10 lakhs, they can receive a donation or a gift. They can receive that. Otherwise, no. If it is not a relative, again, the relative is defined under the FCRA and it is subject to that. Scholarship, stipend of any payment of a nature. If it is scholarship or a stipend, now it is not quid pro quo, because scholarships are received by a student for foreign studies. So that is not, even though it is a contribution, it is not, there is no quid pro quo. That person is not rendering any service to the government, but he is getting some scholarships, some benefits, but it is allowed. It is not considered as a prohibition. Organizations having political objective in its memorandum. Which are the objective? Which are the organizations in political nature? Of course, who are the political or people who are having political parties or having objectives also as a political nature? They are considered as they are part of the prohibition. Now there is one more extra item which I told you I am going to speak to about it. Any organization which habitually engages or employs method of political action like Band or Hartal or Rasta Rako, Rail Roko, Jail Baro, etc. to support public causes. Now these are those, we must be seeing the farmers' agitation somewhere. They are not a political party, but they want to agitate their own grievances, and they go and do some Rail Roko or Rasta Roko. And they also will become, that their organization also will be considered as a this will not be allowed as a donation. They will not be able to take a foreign donation. But of course, there has been a recent judgment saying that of the Supreme Court saying that no, this particular thing will not be considered as a prohibited item, and they will not be considered as a political party. If they are not affiliated to any political party, then they will not be considered as a political party. And if they are not considered as a political party, then that prohibition does not come into. Now, restriction, as I said, if there is a member of a legislature or somebody who is visited there and there is some medical emergency, yes, he can be treated. They can be given medical aid and medical treatment, even to whatever may be the cost. That there is no prohibition, there is no restrictions on it. Foreign hospitality, I told you that there are certain rules and regulations. Any offer not being a purely casual when made in cash or in kind foreign source for providing a person with a cost of travel. Suppose somebody is provided a cost of travel to their play country and they are going to bear the cost of travel without any quid pro quo. So that again will be a considered unless it is a purely casual one. Some once in a while something has happened, that is okay. But if it is like a normal case, then it is considered as a foreign source. What is considered as a purely casual effort, they offer, there is no guidance. And so it is better to avoid that, because FCRA can take a view that no, it was not purely casual one and you violated the FCRA law. Utilization of foreign contribution, purpose of utilization should be defined by the donor. The donor should tell, okay, it is for your CSR work. The CSR donations cannot be just open-ended. It has to be specified that yes, you have to spend for education, you have to spend for poverty, whatever you want to spend for your as per your CSR activity norms, hospital or medical treatment or whatever, that you have to specify towards the aim and objective of the organization, towards the various projects of the organization. You have to specify that this project mein aapko ye kharcha karna hai. So it has to be that way. Towards the admin, yes, the NGO which is receiving these contributions can spend 80% on the project. Maximum 20% only can be spent on admin expense like salaries, rentals, or telephone, etc., which is your admin expenses for the NGO. They can't spend more than 20% on this. Suppose, for example, they are receiving 1 crore of CSR activity. Maximum 20 lakhs can go for the admin expenses. 80 lakhs has to go for the project for which it has been remitted. And now if they receive some other general donation, that can go for admin expenses. There is no restriction, because that is under the Income Tax Act and that is allowed under the Income Tax Act. But when it is a CSR donation, there has to be a specific earmarking towards acquiring fixed assets for the aims and objective of the organization. Now, what is that? How does it, as I kept telling you, the NGO has to comply with the FCRA laws, and then it can receive even from a foreign source. That means it can receive even for an OCI, it can receive even from a foreign company, it can receive even from a foreign citizen. It can receive, provided it has complied with FCRA law. Now, what is this compliance? So any organization which has got definite cultural, economic, educational, religious, or social program, CERT it is called. Okay. Now this organization can receive, and it's an NGO, can receive foreign donation, provided two conditions, two aspects can be considered. One, for any suppose if for example the entity has been established for more than 3 years. Now, if it is not established for more than 3 years, it cannot apply for a registration under FCRA Act. So when it cannot apply for FCRA Registration Act, then it cannot receive foreign contributions. So what do? Suppose some NGO is just established and they have got some offer from a foreign entity. Okay, we want to give you donation for doing this good work, for a CSR work. Now, how will they be able to receive this donation? Then they can go for a prior approval, specific prior approval before receiving of the donation. Now, there are two different situations here. One is called a prior approval, which is generally applicable for those entities or those NGOs who have not yet completed 3 years of its existence. And those entities who have completed 3 years can go for a prior approval also, or it can apply for a registration, permanent registration. Not permanent, matlab it is at least renewable every 5 years. So there is a registration procedure required under FCRA Act. And after registration, then there is no quantum or limit up to which they can get FCR. They can get any amount of foreign contribution. Of course, they have to comply with the provisions. I will come to that, what compliance is required to be done. But as far as the prior approval is concerned, that is specifically to the extent of amount as well as a donor. You cannot say generally I will receive 1 crore and I want a prior approval. Nobody will give you approval. It is not applicable, not possible. Only you have to say that yes, Mr. X or XYZ private limited company or XYZ Inc. of a foreign entity is willing to give a contribution of, let's say, 1 crore rupees, and I want to accept this 1 crore, so kindly give me a specific approval. So the approval is given for a specific donor as well as a specific amount, and you cannot receive anything more than that. You can receive slightly less, but not more. And the donor has to pay that. He has to give a commitment before we make an application to the FCRA. He has to give a commitment in writing saying that yes, I am willing to give this donation as a contribution and not as any quid pro quo. It's not some services being rendered, but I am going to give this contribution irrevocably, and I will honor my commitment. So I have the means to honor the commitment. And he has to give his KYC as to who is this person, because the FCRA would like to know, okay, who is this person who is willing to give this contribution, whether he is having any criminal background, whether he has got any negative aspects as far as India is concerned. And if it is so, if he has got some PMLA things against him, or if there is some money laundering cases going against him, or he has committed some crimes in this country, then approval will not be received. Now, similarly, they will also look at the person who is receiving the donation, who is applying for a prior approval, whether this NGO or this person is got any criminal records or any background, not only of the NGO, but also of all the trustees or all the members of that NGO. They will also have to produce along with their application that their KYCs. They are clean and they have got no criminal background. They have got nothing against them, no money laundering cases against them, no EDs after them, no CBI cases against them, and they have done their work in a very legal and law-abiding manner. There are no FIRs pending against them, no criminal cases against them. All these things they have to prove, and they will have to attach those supporting documents, police verification report, police report, all these things you have to support along with the application. Then only they will consider, and that also chances of application being confirmed or being accepted is very, very low. Okay, so this is my past experience in terms of FCRA registrations. So this is what I explained to you, okay, when it will be denied. If there has been some cases against those people, either the donor or the donee, having religious conversions to inducement of force, creating communal tension or disharmony. If there is some cases against them for that, propagation of sedition, anything spoken against the national interest or against national security, or advocating violent methods to achieve its end. If they are doing anything violent to achieve, if they are peaceful and they are non-violent, then it's fine. But the moment they get into a violence to achieve its means, then they will not be eligible for receiving this. They'll be denied. Activity to divert funds for undesirable purposes. The money is coming in for one purpose, they're using it for some another purpose. No, that will not be allowed. And that will be a strict criminal offense and straight away prosecution. Activity likely to affect prejudicially sovereignty and integrity of India, public interest. If these two things are impacted, then they will not get approval. Types of permission that I had already told you, prior permission of the central government, or get itself registered with the central government, permanent registration. It's not actually permanent, but at least 5 years, and then you can apply for renewal. You can get it renewed. So it is like continuous process. Now, as I told you, prior permission, I already told you that you need a prior approval is necessary before receiving such contribution. Application to be filed in the prescribed form. Prior approval is a donor specific, donee specific, and the purpose specific. It cannot be general, open-ended. application should ordinarily be disposed of in 90 days. It is considered that way in 90 days, but my experience is totally different. But generally, either you get a rejection or you get an approval. Generally, the rejection rate is much higher. For funding over rupees 1 crore, MHA may permit receipt in installments. Suppose if you have got a contribution over 1 crore, then yes, you can get money in installment. But if it is less than 1 crore, no, they will not permit any installment. This is money could come in lump sum. For example, somebody is giving you 50 lakh rupees. They cannot say, I will give you 10 lakh rupees in few 5 installments. No. It will be 50 lakhs at one shot. 1 crore and above, yes, there could be some concessions in terms of installment. Then they can give you some installment. But what is the condition? First installment when they receive, 75% utilize, then only you will be able to get the second installment. Otherwise, you can't get second installment. पहला installment तो use नहीं किया है और second installment लेके आके बैठ जाओ तो ना, that is not correct. That is not logically. And question is why? Because of this. कि at least you spend first, at least 75% you spend, then the second installment can come in, and then you utilize the second installment also. But the first installment utilize नहीं हुआ, the second installment का मतलब नहीं है. Permanent. Now, permanent application is that where the trust is more than at least 3 years or more in existence. Now, what is required to be submitted here? Very important. The trust will have to submit all its working papers for last 3 years. Not only that, it will have to demonstrate, thoroughly that yes, they have done activities which they are committing, that they will be doing for the future. Suppose, for example, in last 3 years, they have done some work of, let's say, 1 crore ka expenditure they have incurred over the last 3 years, each year. And now they want to incur an expenditure of 10 crores, nobody will believe it. If they want to incur an expenditure of 1.5 to 2 crores, yes, that is possible. They can, from 1 crore, they can go to 1.5 to 2 crores. But from 1 crore to go to 10 crore, it will require a lot of contribution. So that nobody will accept. So you have to be reasonable in terms of how you present projections. And your past, you have to prove. You have to submit all the documents evidencing what was the activity given. Like, for example, there could be video clips, there could be brochures, there could be printouts, there could be some, letters given by some very eminent personalities. Yes, this NGO is doing some good work, or they have done some good work, and they have to demonstrate very, authentically. Yes, they have done the good work with the supporting invoices, purchase invoices, and all, etc., all the cost invoices to the FCRA, and then only they will consider. And apart from that, all the trustees, they will have to give the strictest of KYCs. Whether any of the trustees have got, even if one of the trustees have got any negative marking, negative aspects of any criminal or any cases against them, then they are in big trouble. They will not get the approval. So you will have to see before, when you apply, you must ensure that I have seen, this is my practical experience. Before we apply, we take care of all these things, quality check. Otherwise, your application is likely to be rejected. Because then, and again, once your application is rejected, you can't apply for 2 years. And there is a 2 years of locking. So if you cannot say, so I applied now, the chance they lo, nahi aaya application, to wapas apply karenge, change karke, wo jo bhi change karna, nahi, you cannot do that. The 2 years of locking period is there. There is a window. After that only you can apply, because they feel that yes, abhi to reject kiya hai, abhi 2 saal mein usko bolo sudhro, barabar theek karo, baad mein aao. That is the principle. That is the reason why. Now, registration is only for 5 years, and renewal can be sought thereafter. You can apply for renewal, but it takes 6 months for renewal. So what you should do, 4.5 years later, immediately apply for registration, renewal. Don't wait for the 5 year to get over, because this application, renewal may take time. There might be some queries. Then once the queries are solved, then only the renewal will be granted. Now, if you have completed 5 years and then you still not have the renewal, then you can't accept. Not only you cannot accept any CSR donations, but the second thing is that you cannot even spend whatever is there with you as a balance. You have to hand it over to the government. You cannot spend. So that is again the negative side of it. If you have missed out a renewal of registration, you are in big trouble. The money lying in your bank account, which is special account, where the money has to be kept, that money you have to return it back to the government. You can't utilize. You can't say, चलो भाई मेरा तो पैसा तो आ गया 5 साल में, अभी उसको मैं खर्चा करता हूँ 36 साल में, 6 year में, when I don't have my approval. No, you can't do that. You can't spend. Now, the wide powers have been given to central government to cancel the registration, including if necessary to do so in public interest. As I told you, they can simply send one letter saying that even if your registration is in force, like within 5 years also, if they find that you are doing out some activity which is not in the interest of the country, or there's some funds have come in which are not, which are tainted money, and that money is used for some another illegal purposes, they can immediately issue a notice and say cancellation of your registration, and no questions asked. Then the entire money which is unspent has to be transferred to the government. You cannot utilize that money for yourself. Application first has to be filed in the soft format electronically, and followed up by with a hard copy within 30 days. Now there has been an amendment in this Section 12. A proof of identity of every office bearer or director or a key functionary has to be furnished at the time of applications for registration. Renewal prior permission for Indian citizens, Aadhaar card for the foreigners, copy of the passport or OCI card, because foreigners are not supposed to have Aadhaar card. So they will have a passport or an OCI card duly attested and apostilled by their consulate in that foreign country. Rule 9, registration will be granted only if the entity has been in existence for 3 years and has spent minimum sum of rupees 15 lakh. This has been amendment. Earlier, this 15 lakh amount was not there. 3 years was the condition. Now they have amended this law saying that they have to have minimum 15 lakhs. I told you, if they have 1 crore activity, then it's fine. But your minimum is 15 lakh. They will have to spend 15 lakhs on their core activities for the benefit of society during the last 3 financial years. Then only they will be eligible for registration. If they have spent only 1 lakh rupees, even though they are in existence for 3 years, so it is considered as good as not in existence, because we have not done any substantial activity. 15 lakh is what is considered as a minimum activity it is expected for an NGO to do. Online, this I have already explained to you. Now, consequences of non-redeeming, I told you all that the money has to be paid back to the, and you cannot utilize the money, and money has to be paid back to the government. Yes. Now these are the compliances which is required for an NGO which has got a registration under FCRA to be eligible to receive donation under CSR. All FCs must be received only in a single designated bank account in SBI branch of New Delhi. New Delhi again. So you cannot go to any State Bank of India locally in your area and say, I want to open a FCR account. No, they will not do it. You have to open an account only in a New Delhi branch. That also is specified. State Bank of India, New Delhi branch, you have to go and open an account, and that is called FCRA account. All contributions have to come into that account only. Yes, you are eligible to open accounts for the payments or disbursements. So from that account, you can transfer to your disbursement account, from where, suppose if it is locally your account, where you can transfer this, and then from there you can make the future payments for your CSR activities or for your social activities. You can make the payment. But that is, I'm talking about the NGO. But the funds have to be received only in that State Bank of India New Delhi branch. It cannot be received anywhere else. And now why have they kept it that way? So that there is a monitoring. Earlier, they had allowed any State Bank of India anywhere in India, and then people started misusing it. People started opening multiple accounts. So the government will never know how much donation they have actually received. There is the stringent provisions in respect of how the donations have to be received, how they have to be accounted, and what reporting is required to be done. Let me explain you what procedures have to be followed. They will have to issue one receipt for each and every contribution you receive from foreign source. Now, receipt numbers have to be unique and serially identified. It cannot be mixed up with other general local donations. You cannot mix up. It has to be specifically identified from the this separate series of books. Series number has to be maintained. It can be a receipt can be issued electronically, or it can be manual also. It is not no harm on that. But there has to be a format, and there in that format they will have to mention what is the source of that particular receipt, who is the donor, and of course, what is the end use of this particular purpose of this particular contribution, where they are to be used. So that is to be mentioned. The serial number is to be mentioned, and what is the mode of remittance, whether it is inward remittance or by way of a NRE account or NRO account, whatever balances come. So that is again a foreign currency, foreign source. Now, after receiving this money, they have to spend on a particular objects which is specified for this CSR work or for this NGO activities. They cannot use for any other activities. So now the question is, how do they maintain? They have to maintain a separate division in their books of accounts. Suppose if they have a tally, and tally has got multiple divisions. So there will be one division called FCRA division. So any contribution received will be credited to that FCRA division, and whatever expenditure they incur will also be debited to that division, and they have to maintain separate set of books for that division, which will indicate what is the receipt and what is the payment. That means any income inflow and outflow has to be monitored on a regular basis, and there is an annual report has to be submitted to the Home Ministry from this particular thing as to what is the amount of receipt that they receive, and along with that copies of the receipt they have to attach, and you have to show that the serial numbers are matching. That if there are cancelled receipt, then you have to attach the original value. So these are very strict norms on in terms of collecting this contribution and its expenditure. Both will have to be certified by a statutory auditor of that NGO. So if you are a statutory auditor of an NGO, you might have to be certifying this kind of statements, which is given in FC4. There is an FC4 form in which you have to submit this particular format, particular this, and submit to the Home Ministry. And I will come to it later as to how you are going to, as an auditor, how you are going to verify and audit it. I'm coming to it later. There cannot be a mixing up funds of the local funds and this FCRA funds cannot be mixed up. You have to have segregate funds, separate divisions, separate books of accounts, and you have to maintain detailed record and vouchers and supporting for all the expenditure that is incurred. Only 20% is allowed to be for admin expenses, otherwise remaining 80% on the project. FC received by an entity should be utilized only for end use. Now, I will tell you what people do. There are some smart people. What they do is, some NGO is not getting a registration. For some reason, their registration is getting rejected because their trustees are not having some problems, or their activities are not very clear, or they are not getting prior approval, or they are a newly established trust. They are not getting a prior approval also. Now they want to receive donation from a foreign source. So what they will do is they will approach some trust NGO which is registered under FCR and says, okay, why don't you receive this donation? I know one donor who is willing to give me, but then I can't take it because I'm an NGO. I mean, I'm not registered with FCRA, or I don't have a prior approval. So why don't you receive this and then you give me a donation? So that for you it is a local source. No, it cannot be done. What cannot be done directly cannot be done indirectly. So there is a specific prohibition that a foreign contribution which has come into the NGO cannot be used for a purpose of utilization, cannot be used as a donation to another trust. It cannot be done. It is prohibited, straight away prohibited, because otherwise it will defeat the very purpose of this law. Otherwise, people will just circumvent the law. The NGO, which is there will be few NGOs only will be registered who will receive all the donations, and they will start distributing this donation to various entities, which is not permissible. They can spend. They have to spend on the objects. They cannot give donation to another. Maintenance of accounts, I already told you. You have to maintain a separate division, books of accounts, maintain these books and get it audited. Form FC4 is the form which is required to be signed, certified by an auditor, and to be submitted annually with this Home Ministry. And all the documents have to be preserved minimum for 6 years. Then income tax also, we have a 6-year period now for all the documents to be preserved for the reopening. But in our institute, it is 7 years of audit documentation to be preserved. So here, even for the entity, it is the 6-year period for preserving the documents. And this form FC4 has to be submitted within 31st December of the end. That means if the March ending is there, within the period of 9 months, you are supposed to submit. Maintenance of accounts I have already explained you, because we are a little short of time. We will quickly go into the, since a lot of things are pending. All information is to be uploaded electronically. And if there is any change in the composition of a trustee, you cannot take it lightly. It has to be with the, we cannot change any trustees without the prior approval of Ministry of Home. That means, suppose tomorrow if there is another trustee coming in, you have to first get the approval done from the Ministry of Home Affairs. The reason is they will like to vet whether this trustee is eligible, he's got any criminal background, because they also, apart from whatever you may give information, they also have their own search engines, and they will find out whether you have any FIR, because the Home Ministry has got all the records, or they have got access to all the records of the police department or EB or CBI, everybody. So they will quickly find out whether this particular name has got any criminal records or anything which is illegal, or if they have done anything illegal. There might be some news item also. These people will have the full information. So when they will know the information, they may not approve this addition to the trustee. So you cannot change the trustees unless and until this is approval is sought from the, and even not only in terms of the trustees, but even the key members of the organization, like for example CFO or CEO, you cannot change them without the approval. You cannot appoint a CFO or you cannot appoint a CEO without the approval of the MHA. Foreigners on the board or committee. Now here, foreign nationals cannot be a chief functionary of the organization. They can be still advisory. They can still advise you on various matters, but they cannot be the part of governing council. They cannot be part of the board of trustees. Only Indians are allowed to be part of the board of trustees. They can be joined as only for giving, and if they take a specific approval, prior approval of central government, then it is possible, but we generally don't get. Unless the foreigner is of that standing, that yes, his name and reputation is so good that, you know, somebody very, very senior and having a very well-known, good standing in the world, if he is willing to become a trustee here, the MHA will permit, because that will have some support in terms of the activities carried out by the organization. Administrative expense, I have already explained to you what are the administrative expenses, salaries, everything I have explained. Investment in mutual funds, section 8 is a prohibition in investment in speculative activities. That means this NGO which is got under FCRA funds cannot invest in any speculative activities. They can only put it into FDs or some government bonds where it is permissible. Surrender, you can do it voluntary surrender of the FCRA norms. You can surrender the certificate. But then only thing, once you surrender, whatever is the bank balance available, you cannot utilize for any other purpose. It has to be handed over to the MHA. So that is one thing which you have to be considering before you think of surrendering. Various forms which are filed under FCRA is FC4. I told you FC1 is the FC3A and 3B are those prior approvals and registration, 3A and 3B. 3C is for renewal. Form FC4 is for annual return within 9 months, I told you, which is that auditors have to certify. Form FC6A is intimation of change in name of the address within the state, and 6B the change in the objects of the trust. 6C is the change in the designated bank or branch of the account number of designated. Suppose utilization account, I told you, you have got utilization account. For that, if there is any change, you have to intimate by Form 6D. Form 6C is intimate and change in the original key members of the association. If there is any key member in the key members of the association like CFO, CEO, then you have to intimate by 6C. 6A, B, C, D is to be filed within 45 days of making some change. Recurring nature of violations committed by organizations. If you mix the funds like that, then there is a prosecution and they will never get approval. And if suppose, for example, there is one trustee who is associated with an NGO who has made a default, for a non-compliance, and if that trustee wants to be appointed in another NGO which wants seeking FCRA application, then they will not get that FCRA registration only because this particular trustee is blacklisted. And if he has done something wrong here, he was a part of the group which did something wrong here, he cannot join any other NGO. They will never permit any joining him under an NGO. Now let's take up a few case studies because we are running short of time. So we will quickly discuss. There are about 12 to 13 such case studies. We will try to finish within the next 10-15 minutes, and then we'll take up some question answers. A foreign company operating out of India wants to distribute blankets to the street children in Mumbai. The answer is no. It cannot. Unless it directly wants to distribute, it cannot do it. The company purchases the blankets from a market and delivers them to NGO for distribution of the street children. Unless this NGO is registered under FCRA, it cannot even receive these blankets because the blanket is a donation in kind, contribution in kind. Even if this is brought from the Indian market and given, it is not coming from outside India. It is still the funding is happening from outside India. The foreign company is doing it. So naturally, it will not allow foreign source unless that NGO is registered with the FCRA or there is a prior approval. Is this permissible if the NGO does not have a FCRA registration or prior? I told you, no, it is not permissible. Please note that the foreign company is not giving any money. It doesn't matter. Even if it is no money, even if it is no, but even if blanket for distribution is in kind, donation in kind also is covered as a foreign contribution. Same thing, a foundation registered as a charity in Germany wants to start an entity in India for vocational training. No. It forms an LLP in India with only local Indian residents and citizens as a partner. Hence, the ownership of the LLP is entirely Indian. The LLP is not registered as a charity and pays taxes on its Indian income. The German foundation only provides training material and other services. No. It doesn't matter whether it is an NGO, is a trust or an LLP. If any such contribution received from a foreign company, which is a foreign source, unless that LLP is registered with FCRA, and otherwise it cannot. Can LLP receive fees from students in foreign currency for its vocational courses? Yes. Answer is yes, because there is a quid pro quo. You are giving training, you are giving education, and that foreign student is coming to India and is paying fees to study in India. So it is allowed. It is not a contribution because it is a quid pro quo. He is getting services in return. So I told you, services in return, there is no question of FCRA. Can the LLP receive a grant from a German foundation? Answer is no, because there is no quid pro quo. For subsidizing the training service, no. It can, what it can do is, the German company can pay the students over there, foreign students, because we are not concerned with what they give to the foreign students. The foreign students should pay the full fees to us. And the German foundation collect fees from the foreign students at a concessional rate and then pay the LLP the full fees. In other words, no. Actually, it should be other way around. The foundation can give the scholarships to the foreign students in their foreign country. We are not concerned. That foreign student can then pay the full fees to us. That is accepted. Case study 3. XYZ Private Limited sets up a branch office in Dubai for carrying out research and development activity on a corona vaccine. UAE government provides a grant of AED 50,000 to the branch office for carrying out R&D activity. Now see, a private Indian company has a branch office in Dubai, so it cannot receive any foreign contribution. So it is not allowed. Even if it is for R&D for this, it cannot be allowed. MNC Private Limited company sets up a wholly owned subsidiary JV company in France for manufacturing auto components. French government offers yes. This is allowed because it is allowed for the generation of employment in France. So there is a quid pro quo. There you are doing some benefit to the country over there. You have nothing to do with India. That money has come into France, in Euro, and that company is spending it for the betterment of the employment over there. So then it is allowed. It is not considered as a foreign contribution. A branch office of a foreign company in India donates rupees 2 million to a trust in India, not allowed. A branch office of the foreign company, as I said, what is the definition of a foreign company? a branch office is considered as a foreign source only, foreign source. So when foreign source is donating to a trust in India, not allowed. A subsidiary of a foreign company in India, engaged in software development business, sets up a trust and donates 2 million to run its CSR program to comply with section. Yes, allowed. I told you. If it is in compliance, if this subsidiary has been made in compliance with the FEMA provisions, it's allowed. If there is a violation of FEMA provisions, then not allowed. XYZ Private Limited is engaged in a manufacture of drugs. 80% of its paid-up capital is owned by a foreign entity. Now see here, as per the foreign direct investment policy, FDI in excess of 74% requires prior approval of foreign investment promotion board. The company has neither obtained approval from the FIBP nor reported the foreign direct investment to Reserve Bank of India. XYZ Private Limited wishes to donate 25 lakhs to We Care Foundation. Answer is no. Because here they are 80% owned by a foreign company, so it is a subsidiary of a foreign company. It would go under the first category of a foreign company, and even the second category says that even if the money has come into the foreign contribution and for foreign investment under FEMA, which is not compliant with FEMA. Now, if you see, it is not compliant with FEMA. They were only eligible for 74%. They have brought in 80% and without any approvals. So then they are non-compliant with FEMA. And once they are non-compliant with FEMA, they will not be considered as a foreign source and they will not be allowed to contribute like this to the BK Foundation. Mr. A person of Indian origin holding OCI card. He is having a non-resident ordinary account in India. Mr. A wants to donate 50 lakhs to We Care Foundation in India. Now see, people sometimes say, "Arey, ये तो Indian funds ही है ना, मेरा NRO में जा रहा है, मैं थोड़ा उधर से भेज रहा हूँ. I'm not sending from outside India." So it is a local source. How it is a foreign source? No, we are not concerned with from which bank the money is coming. Whether it is India से आता है कि foreign से आता है, it doesn't matter. Who is the person giving is important. And the person here is an OCI. I told you, OCI card holders are considered as a foreign source. Unless this We Care Foundation is registered with FCRA, it cannot receive donation. ABC Inc. USA has opened current account with an authorized dealer in India to receive refund of income tax paid in India. ABC Inc. receives a refund of rupees 1 million. ABC Inc. wishes to donate this amount to NGO in India instead of repatriating the same back to us. And not allowed. Not allowed. The reason is very simple. This is ABC Inc. USA is a foreign source, foreign company. Unless this NGO, which is there in India, which is registered with FCRA, it cannot receive this foreign company. This is considered as a foreign contribution. We Care Foundation enters into service agreement with XYZ in USA for carrying out research activities. We Care Foundation has received USD 1 lakh against invoices raised on XYZ Inc. Yes, for services rendered allowed. It is a quid pro quo. They are rendering service and they are receiving money. Irrespective, FCRA is not applicable. And XYZ, a US national, has come to India for purpose of employment. Now see what happens. There is a XYZ who is a US national. He has come to India for employment. He is working in India. He is employed in India. He is residing in India for last 7 years. He is a resident in India for FEMA, for income tax, all purposes. He is considered as a person resident in India as per provisions of FEMA. Even for income tax, he is a resident. He proposes to donate 50 lakh rupees from his rupee bank account, from his earnings in India, to an orphanage in India out of the income earned in India. And answer is no. The same principle applies. You don't see from what source the money is coming, whether it is coming from outside India or local India. The source is defined by the person, and the person is a foreign citizen. He is not, even though he may be resident in India, it doesn't matter. Now, your residential status in FCRA is not relevant at all. It is the citizenship which counts. So if he's a US national, so he's a foreign citizen, he's a foreign source. So there is no question of this money cannot come into this orphanage unless that orphanage is registered with FCR. Rinki International University, located in Pune, is imparting online training to various students in India and abroad. Rinki has earned USD 1 million from students abroad as fees for online courses. Yes, allowed. Whether receipt of the course from abroad will be considered as a foreign contribution? No. The answer is no. It is not considered as a foreign contribution. It is an income. It is a services rendered. So online classes are being conducted. So for which they have received for services rendered. So there is no question of FCRA compliance. XYZ is a manufacturer of medical devices. Mitsubishi Japan has a WS in India. Now see, there is a XYZ is an Indian company which is a manufacturer of medical devices. Mitsubishi Japan has a WS in India. Okay. Mitsubishi is engaged in a similar activity. Manufacture of medical devices under automatic route in which 100% foreign entity is permitted. Mitsubishi Japan proposes to donate MRI machines to VCare. Now see the facts. Facts are slightly different. Mitsubishi Japan is a Japanese company. Okay, it's a foreign source. They have a wholly owned subsidiary in India that is not doing anything. That Mitsubishi Japan is buying some medical devices from some Indian entity and supplying this to VCare Foundation. Now, it is definitely a foreign source because unless the VCare is registered with the FCRA, it cannot receive this contribution. Now, if this same thing would have been done by the WS in India, it was allowed because it is considered as per the FEMA. 100% foreign equity is allowed, permitted under FEMA. So it is within the norms of FEMA. So even though it is a subsidiary of a foreign company, the Indian company can procure from the market in India those machines and medical devices and give it a donation to VCare Foundation. It's allowed. But directly Mitsubishi Japan giving it, not allowed. Ajay Gandhi, an Indian citizen, went to USA in the year 1995 for the purpose of employment. Since then, he is living in USA. He proposes to donate sum of rupees 60 lakhs to his school in India, 25 lakhs by way of a direct remittance from bank account outside India, rupees 15 lakhs from his NRE account in India, rupees 10 lakhs from his NRO account in India, and rupees 10 lakhs from his son's bank account who is citizen of USA. Now, see, he is first of all he's a non-resident Indian, staying so many years outside India. So, as far as he contributing to this NGO or to whatever school or whatever he wants to do it, no issues. He can give it. There is no harm. There is FCRA compliance is not applicable. Only the last part you see from his rupees 10 lakh from his son's bank account, who is a citizen of India. That USA cannot be done. Son is a citizen of USA. So he is a foreign source. And his father is not a foreign source. Father is a citizen of India, so he's allowed. But when his son is a US citizen, he cannot contribute 10 lakh rupees unless the FCRA provisions are complied with. There are some debatable issues whether this FC can be received towards corpus. I don't see any objection in that. If it is specific for the specific purpose of certain activities to be taken from some school to be constructed or for some building to be constructed, if there is a corpus donation, I don't see any reason why it should not be allowed. What about equity contribution to Section 8 company? No. Section 8 company contribution is by way of donation and not by way of equity capital. It is not covered as a FCM. Can FC be received from payment gateways, crowdfunding? No. It has to be direct inward remittance or to check into that bank account specific. Branch office whether foreign source? Yes. Subsidiary of a foreign company registered in India, we have already discussed many times. Now, what are we supposed to take care? I told you we are supposed to take care something about that FC4. I would humbly and honestly, sincerely request all our members that whenever they are certifying this FC4 for the purpose of the members for the NGO about this one, you follow your SA 230 thoroughly. All your standards on auditing you have to comply thoroughly. Maintain proper documentation, maintain proper records, and see that whatever you are certifying that exactly is matching with your whatever the accounts are being maintained, and ensure that you have the full evidence values in your file. The reason is tomorrow if there is any non-compliance in this, the first thing is the auditor. Who is auditor? And then there is straight away the complaint to the disciplinary committee by the FCRA. And not only that, the chartered accountant can be also prosecuted as abetting the crime. So that we should be very careful when we are certifying this kind of form FC4. So this is all what I wanted to discuss in my today's CSR and taxability and compliance issues. We, of course, as far as the CSR is concerned, we have to ensure that our reporting in the CARO and the reporting in this has to be again, SA 230 has to be properly, thoroughly complied with before we report, because we are supposed to report about whether that amount has been paid. There is some time limit also to be paid. Certain after the year end, within some 6 months, you can meet the shortfall. That is also there. So you have to see that whether it is all actually make the payment or just a check. I will give you an example. One entity issued a check on 31st March as a CSR expenditure, and till 2 months or 3 months, their check was never in cash. And then it was subsequently in April, it was reversed. And the auditor said, yes, this expenditure is incurred and showed as an expenditure. It should have been reversed in the March accounts itself, but it did not do it. And it showed it as a compliance with CSR activity, and disciplinary action was taken against that member. So we have to be very careful whether the actual check has been cleared or not, whether this payment is actually made or not. Then there is a Schedule 7 items where they can invest in those Schedule 7 items also. If they have not invested in they have not spent out during the year, they can invest in Schedule 7 items. There is some donations can be given under those funds. So this is what I wanted to explain you. And if you have any questions, I can quickly take it up.
Yeah. Thank you very much, sir, for the detailed and enlightening sessions. So we will now move to the question and answer sessions. So participants are now requested to post their queries into the chat box. We'll take up it as many as possible in the time available. We have received a few questions.
Yes.
So
Can you read it out if you don't mind? I can't see
yeah.
those questions.
Yeah. First questions we have received that what are the best practices for accounting CSR expense and the books to ensure the compliance with the Companies Act and the MCA guidelines?
Yes, very important, very nice, good question. First and foremost, whether that money which is received, the company which is incurring a CSR activity, whether it is on the activities which is covered under CSR. So this is one of the things, the best practices. Then whether all the supporting documents are available with the company, whether the expenditure is actually incurred or it is just a booking of the bill. This is not the correct way. It should actually spent out. The booking of the bill is yes, okay, but then subsequently it has to be paid also. Just by booking the bill, it does not mean that you have incurred a CSR expenses. Then another thing is that the reporting in the balance sheet, in the financial statement is also very important, and that has to be taken care. You also have to calculate the percentage, what is actually required to be incurred and what is actually being incurred. So both these things are very important. These are the things which you should take care. Good practices when you want to do CSR compliance.
The next questions we are having that how should a CSR liability versus actual expenditure be reported into the financial statements?
Yeah, as I told you, the CSR liability is what is the 2%, whatever is the contribution which is required to be remitted, and we are supposed to disclose what is actually being paid. So that is a part of our CARO also, as well as in the notes to account we are supposed to give. In CARO, we can give a reference to the notes also. We can give a brief discussion in the CARO and say, okay, please refer the note number so and so, giving the full detailed breakup. And there is a particular format in which this particular breakup has to be given. You have to give what is the CSR entire requirement and what is the CSR actually spent. So these both the things we have to give, and what is the shortfall. And once there is a shortfall is reported, definitely the MCA will issue a notice. So
definitely. Next question is, can a company claim the administrative or the overhead expense as a part of CSR? And what is the regulatory stance on this?
As far as CSR is concerned, no. As far as the FCRA is concerned, 20% is allowed. Then it's talking about foreign contributions. When the company is incurring a CSR expenditure, it cannot be incurring on the administrative expense. It has to actually incur expenditure on the activity which is required.
Next is how. Next is how to ensure the proper audit trail for CSR projects, especially those implemented through external agencies.
Now, external agencies, I would mean NGOs. Suppose you are giving donation to an NGO, you have to only obtain a certificate from them that they will be spending for their objects, which is defined under the CSR. And you cannot control their expenditure. You cannot ask, now you give me a statement what you have spent. No, so long as you only take a confirmation that yes, this donation is being, or you give a specific confirmation to them that this money has to be spent only for this particular activity for your objects, and you will not spend anything else. And they confirm, okay, yes, we'll ensure that this expenditure is being cut for this. Your responsibility is over. You have to give a donation. And of course, if it is possible, I mean, it is not mandatory, but if it is possible, obtain some photographs of actual activity. You can tell them, please send us some brochures or some photographs of that activity and keep it with you as a matter of evidence. Yes, actually it has been spent. In case if there is any query from the MCA.
Okay. Yeah. So next question is how can company ensure the transparency and accountability in CSR spending to avoid the regulatory scrutinies?
It is better to spend within the time limit rather than going after within 6 months after the 31st March. Otherwise, scrutiny might be, this company law nowadays is very strict on CSR. I have seen so many notices being received from the company by the company MCA to the companies who are not compliant with CSR. Earlier, CSR was not that favorite topic of the MCA, but now it has become one of the favorite topics for any penalties, and they are in fact issuing prosecution notice also for non-compliance with to all the directors. So it is very serious.
So next question is what mechanism are recommended for monitoring the CSR projects that are executed by third party?
Third party, as again I said, it will be an NGO, because otherwise you yourself will have to do it. You cannot give it to third party to implement an CSR activity. You have to do it yourself. Now, whether you can appoint a contractor, yes, that is okay. You can, say for example, you want to construct some building, you can't do it yourself. You may not have the expertise to construct the building. You have given a contract. But a contract will contain all the conditions of what you are supposed to construct. And we will have the drawings and everything. And there is specific contract. But yes, you are going to construct this building. And what are you going to do with the building? Maybe the buildings again has to be for education, for technical training or some education or research or some skill training on all that. So that you will have to ensure that it is used for that. You cannot say, okay, I have constructed a building and I have let out for offices. Then there is a problem. Then it is not CSR. And again, now there is again a provision that you have to hand over this particular thing to a separate NGO. You cannot keep this school in your building or whatever in your books. It has to be handed over.
So next question is can a company carry forward unspent CSR fund to the next financial year, and what is the process for doing so legally?
Yes, it is allowed to carry forward, but then there are certain procedures to be followed. You have to file certain forms with the MCA, and you can get it done. But carry forward is in sense if there is an excess, not shortfall. Shortfall to you have to comply. There is no doubt. Suppose if you have spent more than what it is, you can carry forward for 1 year.
Okay. So if we have spent any excess amount, can we take up the benefit of that portion into the next financial year?
Yes, you can. Yes.
Just like unspent amount, we can also take the benefit of the excess spent amount also.
Unspent, there is no benefit. Unspent is
we can carry forward.
You can spend, you can't carry forward. Unspent, you have to spend. There is no, otherwise there will be a notice. But as far as the excess spent is there, that you can carry forward to the next.
No, we have the question that can the company carry forward the unspent CSR fund? If they must have to spend the full amount.
Yeah, they have to spend. There is no choice.
Yeah. Okay. The next question is how can company mitigate the risk if the CSR projects fail to achieve the intended social outcomes?
See, you do your job. Whether that really gives the benefit to the society or not, that is not your real concern. But of course, it should not be that you have done something which was never meant for social activity. You should, yes, your intent was for social activity. You have done something right. Somehow it did not help, did not work out. Fine, that is okay. For example, you made a technical institute, you have done it, but there are no students. What do you do?
Yeah.
You are running an institute, but there are only, instead of capacity of 100, only getting 10 students. So what do you do?
Yeah.
You have done your job. You have created this institute. You have got teachers. You have got every facilities are available. Somehow you have not been able to implement.
Okay, great. Next is, are there recommended frameworks for the impact assessments and the reporting of the CSR project?
Sorry, I missed that last word.
Yeah, again, I'll just get, are there recommended framework for impact assessment and the reporting of the CSR projects?
Yeah, the impact assessment and reporting is there in your CARO, it is there in the notes to account, financial statement audited, it is there.
The last questions we are having, the how should company can handle the multi-year CSR projects, especially if the funding extend beyond a single financial year?
Yeah, there are ongoing projects are there. You can have an ongoing project. See, there are two types of things. One, in CSR, there are two types of activities. One is called ongoing project. Then you can have, suppose, for example, you want to construct a school building. Now, it's not possible. Maybe you started the work somewhere in January, February. You can't construct in 2 months. So this will go overlap in the next year itself. When costing also, the funding also will happen next year. So, okay, you say that 2% of this I want to spend in this year. So whatever that is you spend, the remaining will come in the subsequent year. Yes, it is possible. So that is, it is overflowing to the subsequent year. So it is an ongoing project.
So these are the questions we have received from our today's session. So thank you so much for addressing all the queries and very comprehensive and sharing your valuable insights upon the same. Thank you so much, sir.
Thank you very much for a patient hearing. Thank you so much. Thank you, ma'am, and thank you,
sir,
Shima, madam.
for such an insightful session. On behalf of the Corporate Laws and Corporate Governance Committee, I extend our sincere appreciation to our speaker, CA Kusai Goawala, and moderator, CA Hetal Devani, and all the participants for their valuable time and contribution. Thank you for being a part of today's webinar. We look forward to your participation in our forthcoming programs. Thank you, sir. Thank you, ma'am. Thank you.
Thank you so
Thank you
much.
very much.